Recording. And welcome to those students who got up early this morning. Okay. So today we're going to look at question 11.5. And in this question, I'm only going to be doing part A and part D. Part A is adjustments and transactions in the General Journal of New Era Shops at 31st December 20X5. And part B is closing transfers in the General Journal at 31st December 20X5. And we are going to also do the following general ledger accounts: the trading account, the profit or loss account, and the capital account. So we're just going to do those two sections. If you need to chat to Mrs. Klutter, please type your questions on the chat function and she will answer them, because I won't really be able to answer you while I'm busy talking. So please feel free to do that. And I think if you can have your question book open so that you can go through it with me as I do the question. The reason I'm doing only part A and D is part A is basically chapter 10 work and part D is chapter 11 work. So those are the last two chapters that we are revising in this question. So I always advise that when you've read the required, that you actually get your format ready for your question so that as you start reading, you can start putting information into the format almost immediately. So the first part of the format that you should get ready then for part A is you should be putting together the General Journal at 31st of December 20X5 for New Era Shops. This is where you're going to be doing your adjustments, your year-end adjustments, okay? So you just get a page where you're going to put your heading. You're going to say General Journal at 31 December 20X5. You draw two columns for debit and credit with a rand, and then your page is ready to do those adjustments. And then for part D, then you go to another page, okay, start a fresh page for this. And again, here you're going to be doing the General Journal, but here you're going to be doing closing transfers. So have two pages for yourself, one for the adjustments and one for the General Journal. And then the last page that you need to get ready is you need to get the General Ledger ready, because we're doing the trading account, the profit and loss account, and the capital account. So if I was doing this question in the exam, I would have those things ready for myself, because that's where I'm going to be scoring my marks as I go through the question. Okay, so we're going to start reading. We've now got our 3 pages ready for our adjustments and for our general ledger accounts. Okay. All right, so let's go. We start here with balances and totals in the trial balance of New Era Shops at 31 December 20X5. This is a pre-adjustment trial balance, so it means adjustments haven't been made yet. So what you should be doing as you are reading the adjustment trial balance is just getting an idea of what kind of adjustments you could possibly expect. So the capital account, we know that that capital account balance will be the balance at the beginning of the year, because we're going to have to transfer the profit for the year to the capital account. That will be one of the closing transfers we need to do. We see there's a loan from Top Bank. That immediately tells me there's a liability, and I'm going to look for an interest expense, and I see there is an interest expense here, but I'm probably going to need to calculate whether the interest is the full interest for the year or not, and make an adjustment for that. So that's from just looking and seeing that I have a loan. I also have debtors control with an allowance for credit losses. This allowance for credit losses is at the 1st of January. So that means that I'm probably going to need to adjust that allowance for credit losses. I need to look for that in the question. Then we have sales and rent expense. We have vehicles at cost, and we have accumulated depreciation here again on the 1st of January. So that means that I'm going to need to account for depreciation for the year. I see inventory on the 1st of January as well. When I see inventory at the 1st of January, it means that I'm working with the periodic system, because I don't know what the inventory balance is at the end of the year until I've actually counted the inventory. And then I also see that I've got freight and purchases and a purchases amount, which I expect because in the periodic system, when I buy inventory, I debit purchases. Then after my bank account balance, I see I've got settlement discount received and granted. So settlement discount received, I must remember to take that out of purchases, and settlement discount granted, I must remember to take that out of sales. Then I've got advertisement telephone. As I said, I already picked up, I have an interest expense because I have a loan. There's salaries and wages, there's stationery. And you know, with stationery, we sometimes tell you there'll be stationery left at the end of the year, and you need to know how to adjust for that. And then finally, we have creditors control. So it's a good idea just to read your pre-adjustment trial balance, and it gives you an idea of the kinds of adjustments and closing transfers that you're going to need to make. Okay. So our additional information, when we start reading this, we are going to be seeing which adjustments we need to make. So as I read information, I'm going to do adjustments immediately. So they tell me that New Era Shops purchased a new Hyundai Bucky for $120,000 on the 1st of September 20X5, and it will be used for deliveries in the Polokwane area. So that means when I go back and look at my vehicles amount here of $300,000, that vehicles amount includes this $120,000 that I spent on the new vehicle that I purchased on the 1st of September. So you can see here there is $120,000 included in there, so that $120,000 will not have depreciation for the full period. Item number 2 tells me that depreciation on vehicles has to be provided at 20% per annum on the straight line method. So my first adjustment I'm going to make is my depreciation adjustment. And I know that the journal entry for this, I'm going to debit depreciation, which is my expense, and I'm going to credit accumulated depreciation on vehicles. Okay? So I know that those are the amounts, those are the debits and credits. Those are the ledger accounts I need to debit and credit. Now I need to actually do my calculation. Please make sure if you don't do your calculation next to the number you're going to complete, that you do reference it. I'm going to do my calculation right here. So I'm looking at the amount for motor vehicles as being 300,000, and I'm looking at that amount being made up of a new vehicle that I purchased on the 1st of September, and then obviously there must be the remainder is vehicles that I had for the whole of the year. So on that vehicle that I purchased on the 1st of September, I'm going to be calculating depreciation at 20%, but from the 1st of September to the end of December, there are 4 months, September, October, November, December. So I need to calculate the depreciation on that vehicle for 4 months only. Then the remainder of my vehicles, I had 300,000 Rand, and I'm going to subtract the new vehicle. So that means I've got 180,000, which are the vehicles that I had for the whole period. And the depreciation on those will be 20%. So my depreciation, if I calculate that now, The answer is 44,000. So I'm going to debit depreciation and credit accumulated depreciation with 44,000. Okay, so that's my depreciation adjustment, which I need to do. And I've now dealt with item number 1 and item number 2. I like to put ticks next to the things that I've dealt with. Okay, so now we're going to go to the third item. It tells us we have trading goods with a cost of 6,100 that were returned to the supplier bulk base, but no entry for the transaction was made. Bulk base accepted the returned goods. Okay, so we need to make a journal adjustment for this because there was no journal adjustment. Remember, we are working with the periodic system. So when we are returning goods, we are going to be crediting purchases returns because our purchases are going to be reducing, and we are going to have to reduce the amount that we owe to the supplier. So my journal adjustment for returning goods is I'm going to debit creditors control, and the name of the creditor that I'm going to be reducing, I write it next to this. It's bulk base. And the account that's going to be credited is purchases returns. This is going to be closed off to my purchases account when I do my closing transfers. And this amount is 6,100. Okay. As I said, for those of you who've joined late, Mrs. Klutter will answer any questions you have. Just type them on the chat function and she will deal with your questions. Okay, so that's dealing with item number 3. So now let's go on to item number 4. They tell us trading goods of 2,500 were delivered to Ratul Naidu, a customer, on the 28th of December, but it hasn't been invoiced yet. So in other words, we haven't entered this into our adjustments yet. We haven't entered this into our books yet. We have to make an adjustment. So this basically is a sale that hasn't been recorded, and it's a sale on credit to a customer. So when we sell to a customer on credit, we need to debit the customer's account. So we're going to debit debtors control, and the name of the customer that's being debited is Ratul Naidu. And the credit side of the entry is going to go to our sales account. The sales amount is 2,500. All right, so that one was fairly simple. That was item number 4. Item number 5 tells us that the balance of 900 in the account of Fikile Matume, a debtor, has to be written off. So we have a customer who owes us money, but we've decided that we're not going to be able to recover anything from the customer, so we're going to write his balance out of our books. So this 900 is going to become a credit loss. So credit losses are expenses. When we increase expenses, we debit them. So we're going to debit credit losses with 900 Rand. And we are going to credit the debtors control because we're taking this customer's balance totally out of our books, so we have to take it out of debtors control, and we're also going to credit the customer's account so that his balance becomes 0. So we're going to credit the customer account for Fikile Matume in the debtors ledger with 900 Rand. So that's writing off the credit loss, and that's item number 5. In item number 6, it says we must adjust the allowance for credit losses to 2,160. So if we look at our question, we saw in the trial balance that there was an allowance for credit losses of 1,200. So we can see we have to increase the allowance for credit losses. It's currently 1,200, and we have to increase it to 2,160. So in other words, this negative asset or the contra asset has to increase. So we're going to be crediting allowance for credit losses to the increased amount. And we'll work out the increased amount when we do our journal adjustment here. So the allowance for credit losses is going to be credited because it needs to be increased. I'll work out the amount of my increase by taking 2160, which is what the increased balance should be, and I subtract 1200, which is what it currently is, and the difference is 960. So I'm going to be crediting the allowance for credit losses with 960, and I'm going to be debiting my credit losses expense with 960. So that's my adjustment for the allowance for credit losses. It's increasing by 960 Rand. Okay. So if I look now at my question, I've done item number 1 to 6. I've done all the adjustments that were required. Let's carry on, and we're going to look at item number 7. Item number 7 tells us that no entry was made for the payment of 1,800 to TNX traders in settlement of an account of 2,000 Rand. So we've paid TNX traders. TNX traders will be a creditor, and we paid them 1,800, but the amount we actually owed was 2,000. So obviously the difference therefore means that we got a settlement discount from the supplier because of this payment that we made. So we are going to enter that transaction now into our adjustments. So we are going to reduce the creditor because we're paying the creditor. The creditor's control account is going to be debited. The name of the creditor that we're paying is TNX Traders. And the total amount that the creditor is going to be reducing by is 2,000 Rand. We paid the creditor, so when we paid an amount, that means our bank account is going to be decreasing. We credit the bank account, and the difference of 200 Rand, therefore, is settlement discount that we've received. And when we do our closing transfer, we're going to close the settlement discount received against purchases. So that was item number 7. So now I'm going to look at item number 8, and it tells me that the rent expense included the rent for January. Remember, my year ends in December 2005. So if rent includes January, then it means I've prepaid some of my rent. So if I go and look at my rent account, here's my rent expense account. Okay, it's right at the top. 19,500 is the amount of my rent expense, and that 19,500 is obviously for 13 months because it includes the year plus it includes January of the following year. So I need to make an adjustment, taking the January rent out of my rent expense account, and I need to debit prepaid expenses. So I have a prepaid expense that I need to debit, and my rent expense needs to be reduced. So I'm going to credit rent expense and debit prepaid expenses. My calculation is the rent expense account is 19,500. That's the amount showing on the trial balance, and I divide that by 13 months, which means my rent comes to 1,500 a month. So that's the amount of my adjustment. I need to debit prepaid expenses and credit rent expense with 1,500. Okay. So if I go back to my question, I've now done item number 8. So I'm going to tick item 7 because I did that, and item 8 because I've done that one. Now I'm going to item number 9. Item number 9 tells me that there was a loan that we obtained on the 1st of August 2005, and remember we saw that loan on our trial balance. We'll go and look at that now. The loan was obtained on the 1st of August 2005, so our year runs from the 1st of January to the end of December, so that means that it was during this year that we obtained this loan. The loan interest is 12% per annum, and we are going to repay the loan in equal annual installments over the next 5 years. We don't need to worry about that because the first installment will only be in 2006, the next year. And they tell us the interest rate is market related and interest is payable every 3 months. So we need to go and look at the information we already have in the question. So we can see here that we have a loan of 10,000 Rand. That loan we got on the 1st of August 2005. And we can see that we already have an interest expense of 300 Rand. So we're going to work with those two amounts now. We've got to calculate what should the interest expense be for the period that we had the loan during this year. So there are a number of ways that you could do this calculation. I'm just going to show you one way of doing it. Okay, so I need a new page for my journal adjustments for part A. So I am first of all going to do my calculation before I do my journal adjustment. So basically my calculation is that I had a 10,000 Rand loan on which interest has to be paid of 12%. And interest must be paid from the 1st of August to the end of December. Well, interest has to be accrued for, rather, from the 1st of August to the end of December, which is for 5 months. So my total interest expense for the period is supposed to be 500 Rand. And I saw that in my interest expense account, I actually already have an interest expense of 300 Rand. That means I must still accrue for an interest expense of 200 Rand. So I am going to debit expenses payable. Sorry, excuse me. I'm going to debit interest expense because that expense needs to increase, and it needs to increase by 200 Rand. Then the credit, I'm going to credit accrued expenses or expenses payable. This is a liability that's going to reverse on the first day of the following year. And that amount that's owing, that hasn't been paid for interest relating to this year, is 200 Rand. All right, so that was item number 9. Item number 10 tells me stationery of 900 was unused on the 31st of December 20X5. So that means I need to record stationery on hand at the end of the year of 900 Rand. If you go and look at the trial balance, the stationery expense we're given is 3,600. So the expense has been debited with 3,600. So we need to take out of there the stationery we haven't used, and we need to debit our consumables account, which we're going to call stationery on hand. So my journal entry is I'm going to debit stationery on hand, which is my expense. Sorry, my asset, excuse me, it's a bit early. Stationery on hand is my asset, and my asset is 900. And I'm going to take this out of stationery expense because this 900 hasn't been used during this year. So the amount that's left in my stationery account will be the actual stationery that was used during the period. Okay, now we go to item number 11. During the year, the owner took trading goods with a cost of 2,000 Rand for private use, and no entry was made to record this transaction. So we need to record the fact that 2,000 Rand of goods was taken by the owner. So when the owner takes something out of the business for his own account, we call it drawings. And because this is using the periodic system, we're going to take that 2,000 Rand out of purchases. So for this transaction, for this adjustment, we're going to debit drawings with 2,000 Rand, and we're going to credit purchases with 2,000 Rand. Okay, so that's the adjustment for item number 11. So I'm just going to tick that one. It's been dealt with. Then item number 12 tells me that according to a physical stock taking on the 31st of December 20X5, inventory on hand was 12,000 Rand. Now remember, we're dealing here with a periodic system. So that means we don't know how much inventory is until the end of the year when we actually count inventory. We're going to put this entry in as an adjustment, but you could also put this entry in as a closing transfer. In the exams, we will usually be asking you specific numbers. In the question, we'll say make adjustments for certain numbers. So if we wanted you to make an adjustment for the physical stock taking for the stock, the inventory at the end of the year, then we would tell you to make an adjustment for that. So we're going to make an adjustment for this 12,000, which is actually also a closing transfer entry. So when we put the 12,000 into our books at the end of the year, we are going to be putting in our asset as inventory at the end of the year. And the inventory amount at the end of the year should be 12,000. And we are going to take that 12,000 to the credit side of the trading account. So that's going to go to the credit side of my trading account. What I'm going to do, just for completeness sake, is I'm also going to now, although this could also be a closing transfer, I'm going to take the opening inventory amount, which is shown on my trial balance of 56,100, and I'm going to make an adjustment for that now. This could also be a closing transfer, as I said. So this adjustment is for the closing inventory, and now I'm going to make the adjustment for the opening inventory. The opening inventory needs to be debited to the trading account, 56,100, and I'm going to credit the inventory account because this was the balance in my inventory account, and I need to take it out of the inventory account and debit it to the trading account. So this is, I'm just going to write here, this is the opening inventory amount. Okay, so these two are also closing transfers. The final adjustment we need to look at is adjustment for item number 13. So we've done number 12, and I'm now going to look at number 13. At 31st of December 20X5, the accountant determined that settlement discount, which could still be granted on the current year's sales, amounted to 90 Rand, and settlement discount, which could still be received on the current year's purchases, amounted to 310 Rand. So we need to make an adjustment for those two amounts. In other words, we need to create an allowance for settlement discount granted, an allowance for settlement discount received. If we again go and look at our trial balance, we'll see there are no allowances. We have to create those allowances. We do already have amounts for settlement discount received and granted. Those amounts are going to increase because of our adjustments. So the adjustment for settlement discount granted is a reduction of sales. We're going to debit settlement discount granted with this amount of 90 Rand that we could still give to customers because of sales we've made to them in the current year and them paying the amounts that are owing for those sales on time. They're going to get the settlement discount. And we need to raise it this year because the sale was this year, so the settlement discount needs to go off against those sales this year. So I'm going to credit allowance for settlement discount granted. Remember, this is a contra asset. It's going to reduce debtors when I prepare the statement of financial position. Then I've also got settlement discount received. So I'm going to be debiting the allowance for settlement discount received because this is a negative liability or a contra to my creditors amount. Okay, so the allowance for settlement discount received is 310, and I'm going to credit settlement discount received, which in our closing transfers is going to reduce the amount for purchases. So this is settlement discount relating to purchases that I've already made in the current year. If I pay those customers on time, those suppliers on time, I will be getting this discount and I must record it in this year because it relates to this year's purchases. Okay. So I've now done all of my entries for the adjustments. So I've completed part A because part A wanted me to do the adjustments and transactions in the general journal at the 31st of December. Now I'm going to go and do the closing transfers and I'm going to prepare the 3 ledger accounts. What I'm going to do first is I'm just going to look for the balance of the capital account. The trading and profit and loss accounts are clearing accounts. They don't have balances, but the capital account does have a balance of 266.50. So I'm just going to start by putting that into my capital account at the beginning of the year, 20x5, January the 1st, I have a balance brought down on the credit side of 266.50, okay? Because we are required to do these 3 ledger accounts, the trading account, the profit and loss account, and the capital account. So I'm starting with just putting that balance in because what I'm going to do as I do the closing transfers, I'm going to post them to these 3 accounts. Okay. All right, so let's start. I have my page ready that I'm going to use for my closing transfers, and I have my ledger accounts ready because I'm going to be posting the amounts immediately to the ledger accounts, just those 3 ledger accounts. Okay, so when I look here, when I do my closing transfers, I always like to start with sales and then calculate cost of sales. So for sales, we can see there's 200,000 Rand here for sales, but I first need to look for the amounts that need to reduce sales. Sales need to be reduced by settlement discount that I've granted to my customers, and it also needs to be reduced by any credit, sales returns that I might have made. There are no sales returns here, but I just need to check through my journal adjustments that I've just made to see if there are any amounts there that I'm going to need to adjust. So settlement discount granted here, this 3,600 needs to be adjusted. I also need to look for sales returns. There are no sales returns here. But now what I need to do is I need to go through and check the journal adjustments that I did. I'm looking for adjustments for sales returns and any adjustments for settlement discount granted. So there's no adjustments here for sales returns, but there is an adjustment that I made to settlement discount granted. I have an adjustment here of 90. So I need to add that 90 to the amount of settlement discount granted that I have here on my trial balance. So those two amounts together are the total amount that's in the settlement discount granted account. So I'm going to credit settlement discount granted, and I'm going to reduce the settlement discount granted account to 0, and I'm going to debit sales. And this settlement discount granted amount, so from my trial balance I had 3,600, and I added to that the adjustment I made for the end of the year allowance. So the total amount that I need to be transferring to my sales account is 3,690. So sales are going to reduce by 3,690 Rand. I'm then going to look for the sales amount that I'm then going to be transferring to my trading account. I said I like to do all the sales first, and then I'll work with the cost of sales amounts. Okay, so this amount for sales is 200,000. But now remember, this account for sales has now been reduced by 3,690. So sales has a credit balance of 200,000 minus the 3,690. So I'm going to be taking 200,000 minus 3,690, and there's another adjustment that I need to look for here on my journal adjustments. So that 3,690 is going to be subtracted because that was a debit to sales. I need to look on my journal adjustments. There was also this 2,500 that I need to add to sales for the year. So just to go back, we have the 200,000 in our trial balance. That's the sales amount. We increased the sales amount by 2,500 Rand. And we reduced the sales amount by 3,690. So I need to add 2,500 Rand to my sales amount and subtract the 3,690. So that means the balance in my sales account would have been 198,810. And I'm going to credit the trading account. So the trading account is going to have a credit of 198,810, and that is the amount for sales. So if I go to my trading account, I'm going to put this on the credit side. Here I'm working with December 2005, the 31st, and here I'm going to write sales, and the amount for sales is 198,810. Okay, so I've put sales in. The next closing transfers, so those are my closing transfers relating to sales. I now want to do the closing transfers for purchases. Before I do that, one of the things that happened in this question is that we made adjustments here which were actually also closing transfer adjustments. When I calculate cost of sales using the periodic system, I always start with opening inventory, I add purchases, and then I subtract closing inventory. My opening inventory was the balance in my inventory account at the beginning of the year, and I've credited that asset account, and I debit the trading account with 56,100. So in my trading account, I will start here on the debit side with the opening inventory amount. This is the inventory I started with at the beginning of the year, and that's 56,100. Okay, and I did that closing transfer as an adjustment. Now I want to look at purchases. So I need to go and see what information was in my trial balance and which adjustments were made against that information. So here in my trial balance, I have an amount for purchases of 48,000, but I also have settlement discount received of 6,800. So I've got to work with those two amounts, but I must remember that I made various adjustments to those amounts in my journal adjustments. So here I have an amount for purchases returns. So the purchases returns account has a credit balance of 6,100, and that credit balance needs to reduce purchases. So the first thing I'm going to do is I'm going to take that 6,100 out of my purchases returns account. So the purchases returns account had a credit amount of 6,100. I'm going to debit that account, and I'm going to reduce purchases with 6,100. So now I'm going to be able to work out how much is the purchases amount that I need to take to my trading account. So my trading account, I need to take this 48,000. I need to adjust for this settlement discount received. Sorry, I think I might have talked about granted just now. Settlement discount granted relates to sales. Settlement discount received relates to purchases. So I've got the 6,800 of settlement discount received that relates to purchases. So that will need to be deducted from purchases. But remember, I also made an adjustment. I adjusted the settlement discount received by 310 Rand. So my purchases account has various amounts that need to be reduced from it when I reverse that to the trading account. So I'm first of all going to be debiting settlement discount received, and the settlement discount received in the trial balance was 6,800, and I had an extra 310 that I created at the end of the year. So the total amount for settlement discount received is 7,310, and that amount is going to reduce purchases, 7,310. Okay, so those are the two amounts, purchases returns and settlement discount received, that need to reduce purchases. So now I'm going to take purchases to the debit side of my trading account. So the trading account is going to be debited and the purchases account is going to be credited. The purchases account in my trial balance had this balance of 48,000 over here. So I'm going to start with that 48,000. Then I'm going to subtract my purchases returns amount of 6,100, and I'm going to subtract the settlement discount received of 7,310. So the total amount that would have been in the purchases account is 32,590, and I'm going to credit the purchases account with that amount. I'm also in this question going to be adding freight on purchases when I do this adjustment. Remember, any costs relating to getting inventory to the point where it's available for sale needs to be added when I calculate cost of sales. So that freight on purchases amount also needs to be credited to clear that account. It had a debit balance, so I'm going to credit freight on purchases with 1,800. And both of those amounts will be debited to the trading account. So if I now go to my trading account, I'm going to debit the trading account with those two amounts. The purchases amount is 32,590. You could have done this as 2 separate journal entries. That would have been fine. And freight on purchases is 1,800. Okay. So, sorry. In my trading account, I now have the amount for sales, and I have the amount for opening inventory, and I have the amount for purchases and freight on purchases. The only thing that I now still need to put in here is my closing inventory amount. And you might remember we already did the adjustment for this when we did our adjustments. The adjustment we did was for the 12,000 Rand of inventory here. We're going to debit the inventory asset and credit the trading account with 12,000 Rand. So here the trading account is credited with 12,000 Rand. So now I've got all the amounts that I need in my trading account. The credits add up to 210,810. I'm now going to be calculating what my gross profit amount is, and that gross profit amount is going to be transferred to my profit and loss account. So this is my gross profit for the period. If I take that 210,810 and I subtract all of these debit amounts that I have here, the balancing amount is 120,320. So that's the amount that I need to make the adjustment for. I'm going to transfer that 120,320 into my profit and loss account. That's the credit that I start with in my profit and loss account, my gross profit for the period. So in the trading account, I have 120,320 as a debit, and I'm going to credit the profit and loss account with that 120,320. So I need to show that as my journal adjustment. I'm taking the debit that I put to the trading account, because remember the trading account had a credit balance, so I debit the trading account and I credit the profit and loss account with the 120,320. Okay, so those are the adjustments relating to sales, cost of sales, and gross profit. Those are the adjustments relating to my trading accounts. I'm now going to show you, I'm not going to do them, I'm going to show you the rest of the adjustments. So I've done all of the adjustments for the trading account. The rest of the adjustments are relating to income and expenses that must be closed off to the profit and loss account. So the rent expense in the trial balance, you had 19,500. But you will remember that we had to make an adjustment to the rent expense of 1,500 because there was too much in that rent expense account. So we had to reduce the rent expense by 1,500. So my rent expense account actually will only have a debit balance of 18,000. So I credit rent expense with 18,000. Advertisements, the trial balance has 9,000, so I credit advertisements with 9,000. The same for telephone. So those amounts come straight from the trial balance that we were given. Those amounts have not changed. Okay, so what I'm doing now is I'm looking for the rest of my income and expenses, and I'm closing them to my profit and loss account. So I've now dealt with advertisements and telephone. Interest expense is the next one. You will remember for interest expense, we had to make an adjustment. The trial balance had an amount of 300, but I had to add 200 to that. So the total amount of my interest expense that I need to credit is 500 Rand. Okay, that's because of the adjustment that I had to make for interest. That was this adjustment over here. Here's my interest adjustment. I had to add 200 Rand to interest. If I go back now and look at my closing transfers, so I'm busy making the closing transfers. In this question, there is no other income. There are only other expenses that we're closing off. So we are closing off then the salaries and wages. That amount hasn't changed. And we have to close off stationery. But remember, that amount changed because there was stationery at the end of the year that we hadn't used. And that stationery amount that we hadn't used was this 900 Rand over here. Okay, so going back to my profit and loss adjustments, I'm crediting salaries and wages. That amount came from the trial balance. Stationery on the trial balance was 3,600, but I reduced that by my 900 adjustment for stationery that hadn't been used. That means my stationery expense had a debit of 2,700, and I'm crediting the stationery expense account to the profit and loss account. Depreciation. The depreciation adjustment was the very first adjustment that we did. So here's my depreciation adjustment of 44,000, and that depreciation adjustment ended up having a depreciation expense of 44,000. So I need to credit the expense, reduce the expense to zero, and debit my profit and loss account. The final expense that I still need to account for is the adjustment that I made for credit losses. So in my journal adjustments, I debited 900 Rand because of the one debtor that I wrote off, and I debited 960 because of the allowance that I created. So those two amounts together give me the amount for credit losses, 900 plus 960. So the total amount for credit losses is 1860. So those amounts are all expenses which have to be debited to your profit and loss account. So I'm going to show you the profit and loss account over here. So this is the trading account balance. This is the gross profit that I showed you. These are all of the expenses that you've just seen in that journal entry that I showed you. So we're taking all of those expenses, working out their balances, and we are debiting them to the profit and loss account. Once you've done that, then you have to work out what is your profit for the period. So you now have your gross profit minus your expenses. You add up your credit side, you get 123.20, and you take that across to the debit side, you subtract the expenses, your balancing amount is 5910. So you need to make a journal adjustment for the 5910 because that 5910 is the profit that belongs to the owner that we need to credit to the owner's capital account. Remember, we started with the balance of 266.50. Now we're going to add the profit for the period. So this is the adjustment here where we're taking the 5910, which is the debit amount in the profit and loss account, and we're crediting that to the capital account. The final adjustment we need to make is the adjustment for drawings. This adjustment, we don't see any drawings on our trial balance, but you will remember in the adjustments that we did, the owner took some inventory during the period, and we need to account for that as drawings. So in other words, that 2,000 Rand is the amount that needs to be reduced against capital. So here I'm crediting my drawings account because I had a debit balance, and I'm debiting the capital account with 2,000. So I'm clearing the drawings to zero. So if I now look at my capital account, this is my balance at the beginning. This is the profit for the year that I calculated in my profit and loss account. This is the drawings that the owner took from the business during the period, so that reduces his capital balance. Now you can work out the capital balance at the end of the year, and it's 264,560. Okay. So I just quickly want to show, to summarize what we've done in this question. We've completed the trading account. We started with our trial balance amounts, and then we had to adjust for things like settlement discount, purchases returns, and we also had to include freight on purchases. We had to put in opening inventory and closing inventory. Remember, in the trading account, you have your sales and then opening inventory plus purchases plus freight on purchases minus closing inventory gives you the cost of sales. So sales minus cost of sales gives you your gross profit. That gross profit got transferred to your profit and loss account. Then you subtracted all of your adjusted expense amounts and transferred that to the capital account. The capital account, we close off the drawings for the year to get the closing balance. So that is the end of this question. Good luck, students. Thank you for listening.
If I could just say a word.
Please take note of all of the information that's on ClickUp, and we really do wish you the best of luck for the exams. Please consult if you have any questions. Thank you.
Mrs. Smith?